Hi, in this video I'm going to take a quick run through two of my older ISAs that I have, one with Vanguard and the other with Invest Engine. So let's jump across straight away to Vanguard and have a quick look at what this looks like. So this was my 21-22 ISA and I managed to get £20,000 into this, so that was quite a good achievement, and it is giving me a basic overview that I have made 6.51% return, and I suppose that is okay over that time period if we think of how bad some of the things were that had been going on within that time period. Quite a few peaks and troughs, as we can see in this chart over that time period, with a few things like the mini budget kicking in, which caused a few dips in the whole stock market. This has bounced about quite a bit over the last 18-20 months, but we're looking at total gross investment value gain of £830, and then also getting some interest from the cash that sits in there of about £267, and then dividends being paid in at £246. Also on top of that, there are the charges that Vanguard have charged me over that time period. Let's take a bit of a deeper dive into it and have a look and see what investments I hold within this ISA. And this is an older ISA, as I've said. So I've got Life Strategy 40, which is my poorest performing investment in this whole thing, coming in at £38 down. Looking at the largest holding that I have actually in here is my VUSA, very closely followed by VWRL in there, so the All World ETF, the FTSE All World ETF. Then looking at what's coming in next, you have BHYL, then VFEM, looking at the emerging markets, and VUKE. So which one of those is up the most? It is VUSA, and yes, fair enough, I have more invested into that, but it is the one that has seen the most gain over that time period. We can break that down a little bit further, and this just shows you some of the actual gains that I've had. If you look at what has given me the largest gross over that time period, it's actually VUKE, but very closely followed by VUSA coming in there at 14.76%, and then obviously VWRL at 11.56%. Just to show you that things haven't gradually grown over time. There's been a bit of an up, a bit of down. Actually, even over the last 6 months when things have been a little bit more vibrant within the stock market. If we have a quick look at this, you'll see that I haven't always been growing, and this is what I say, you've got to be in this for the long time, and you've got to ride out some of those positives and negatives. So you've got back December last year, I saw a reduction of £341, and then in some other months you've got January coming in with £471 gain over that time period. It just ebbs and flows as we go through the time period. And whereabouts is this then all located? So there is still 28% of this actually in cash. I do need to invest that into the market so that it's actually working for me. We end up with that geographically focused, 44% into America, and then a bit of a breakdown, Asia Pacific at 10%, UK at about 8%, and that's reasonably well balanced. Potentially a little bit more needed into that American market, but obviously we've got that 28% sat in cash. If we then look at whereabouts all of this actually is, we've got highest holding in investment terms, you've got Apple, Microsoft, Alphabet, Amazon, and that's because I've invested into things like VUSA, which have got those kind of holdings. And then we have a look at what is the most popular sector to be in. It's at about 11.2% in the financials, and then going down through healthcare, consumer discretionary, technology, etc. That's sort of where I am on the Vanguard side of things. Where are we on Invest Engine? So this was last year's, the 22-23 ISA period. And over that time period, I was basically just putting in £250 per month into this and just having it on auto invest. The portfolio that I had built up had 5 ETFs in it, and it looked at IUKD, VUSA, VHYL, VUKE, and something into the emerging markets. And actually in this case it was the MSCI emerging markets, so HMEF. Vanguard also do a similar one, and that is VFEM, and that's what I'm invested into in this current financial year, and that's through Trading 212. Within this portfolio, we are up about 3.38%, and that's about £162 gain on the money that's been invested into here. And you can see that on every month, you'll just see that blue line shows us whereabouts the money invested is, and anything above that is when we're actually in profit. You'll see that I don't invest anything more into this. All that I'm investing into this, because this is an old ISA, is money that I'm getting from dividends. And let's jump across and see what dividends have looked like. So we're looking at, that's the £106 worth of dividends over the whole time period that I've been invested into this platform. And how does sort of progress and how does growth within the portfolio actually look? So once again, looking back at the 5 different ETFs that I've invested into, IUKD not doing particularly well. That is down about minus 7.27%, and also the VHYL ETF. The high dividend yield ETF is also down, and that's coming in just a little bit under at 0.58%. Which one's doing best? It is VUKE, coming in with almost a 12% increase in value. I know it's only a small amount, but this is just showing you what kind of investments you can be making if you're just putting away a couple of £100 a month. The emerging markets just about coming in just over at 1.52%, and then VUSA doing a bit of a run this year, and that is up 6.25%. Let's just have a look and see whereabouts that £106 worth of dividends are actually landing into the account from. And actually the iShares UK dividend ETF is the one that is paying me over 50% of those dividends, and that's because it's coming in at that yield on this platform of about 5.76% per year. The TER, or the ongoing charge for this, is slightly higher than I like to be at, coming in at 0.4, but you'll see that I also hold IUKD in my most recent Trading 212 portfolio. S&P 500, it only has a small yield of 1.32%, coming in at that grade. This is the bargain bucket ongoing charge that you can have, and that's at 0.07, and it's paid me about £11, just over £11 of dividends. If we have a look at the all world high dividend yield, so VHYL, coming in at 3.58%, not very high yield, but it's spread across many different investments, so it is well diversified. It is coming in a little bit more expensive at the 0.29% ongoing charge, and it's paid just over £25. We have FTSE, and this is coming in at 3.7% of a dividend yield, but the TER is much better, coming in at 0.9%, and it's paid a dividend. And actually I've only had this for a number of the payment cycles, but this is coming in, and remember it's a small amount that I'm invested into this one, but still coming back at 6.46 of a dividend. And then the smallest dividend that I've received, and I've only received this over 2 time periods anyway, is the emerging markets dividend, coming in at just under £1, 2.44% yield and a 0.15 TER. If you want to go and have a look at how things are getting on in this year's ISA, why don't you go and have a look at my most recent portfolio update that I've done, and it'll show you the different ETFs that I've bought into in the ETF pie there, that I'm now replicating this, just paying £250 a month, auto invest into 4 different ETFs, which basically give me an all-world replication of VWRL-ish. and that's through 4 different ETFs. Thanks very much for watching, and I will see you in the next one. Cheers, bye.